Take a listen to this clip of VP Harris making a speech on inflation.
So believe me, as president, I will go after the bad actors. And I will work to pass the first ever federal ban on price gouging on food.
Who are these bad actors that she's referring to?
These are both on the grocery retail side, so Kroger, Albertsons, Walmart, Costco, where folks buy their groceries, and the upstream producers of grocery products, whether it's Frito-Lay, Ben and Jerry's.
Let's talk about the arguably the most controversial part of her plan, the taxing of unrealized capital gains, which has been speculated that she was considering. I've interviewed several economists about this issue. They've unambiguously opposed this. So,
which is how many people is that in the U.S.?
0.06.
Yes, 10,000 people. That's
okay.
It.
Percent, yeah.
Yeah, so 0.06% of people, but 10,000 tax units.
Okay. We're talking about how the landscape of the economy may change after the election, focusing primarily today on VP Kamala Harris's economic plans. As you may be aware, she only recently in the last month revealed her economic plan. So we're here to understand more of what her policy proposals mean for the economy and for us. Joining us today is Elizabeth Pancotti. She is the Director of Special Initiatives at the Roosevelt Forward think tank. Really interesting work that they're doing. Welcome to the show, Elizabeth.
Thanks so much for having me. I appreciate it.
Tell us a little bit about your work and your professional background leading up to where you are currently, and we'll talk about your work and some of the policy proposals you've come up with recently.
Yeah, at Roosevelt, I lead our work on tax policy, and I do a bit of work on industrial policy and trade. I kind of sit across our research and advocacy areas, kind of running the economic policy gamut. Before that, I was in the Senate, where I worked for Senator Sanders on the Budget Committee and the Health, Education, Labor, and Pensions Committee, where my portfolio was economic policy, the whole thing. So I worked on the American Rescue Plan and the Inflation Reduction Act and the CHIPS and Science Act, the bipartisan infrastructure law. So kind of the gamut of spending over the last 4 years or so. And then before that, I worked at Employ America, another think tank here in DC, where I focused on unemployment insurance during the pandemic. Before that, I was in academia at the National Bureau of Economic Research and the Boston Fed, where I did applied micro research. So come from a quant background and now have moved towards the policy space.
Very interesting. Well, before we talk about the specifics of Kamala Harris's economic proposals, and we'll compare them to Trump's, of course, tell us about, generally speaking, over your career, the biggest problems the American economy faces today and how we can fix these problems and ultimately make the standard of living higher for the average American.
Yeah, I think the most pressing problem in our economy today at a macro scale is really the increasing wealth and income inequality and the concentration we see at the top. We have tried many ways over the last 40, 50 years to combat this, and those gaps have widened based on the economic policies we have chosen, based on our response to the last recession, based on tax cuts that have failed to deliver the promises that they would trickle down and help everyone. I think we really have seen a tide change in the last 5, 6 years, where we are looking for a new way of economic policy making, where those imbalances are rebalanced and redistributed. I hope that continues, but I think that is really weighing down the productivity of our economy, the growth that we're able to achieve, and it really is a pervasive issue that is difficult to move beyond. Other macro problems that are tangentially related are obviously the interest rate situation that's going on now. I'm happy to see the Fed cut 50 basis points yesterday, but it really is having a drag on the investments we're seeing in clean energy, but across the economy, especially on the housing side. It's obviously the other edge of the sword was high inflation over the last 3 years and the supply chain crises we are facing. These are interrelated, and then it's difficult to fix longstanding supply chain crises if interest rates are dragging capital investment to try to make those more resilient. And so all of these are really interrelated and causing macroeconomic imbalances today that we haven't quite figured out how to crack.
Okay, several things I want to come back to. So to your point about the wealth gap increasing, so you're right. This is from the Federal Reserve. As you can see, the top 1%, even the top 0.1% have seen increasing wealth, while the bottom 50% have stagnated. I'll come back to this chart because I think there's a lot to discuss there. Going back to your point about interest rates. So what is your idea here? Do you think that the Fed funds rate has been kept too high for too long, thus hurting the middle class? Is that ultimately your thesis?
As the natural federal funds rate over the past few decades, or just in the last 3 years?
Let's take it with the last since the beginning of the Biden administration.
I think that when Biden entered office and we had a zero lower bound, there's sort of two phases. So I'll separate them. One going a little bit back to Trump. At the onset of the COVID pandemic, we had both a huge fiscal and monetary response. We had the CARES Act, which is a huge influx of stimulus to both businesses and to workers and families. That was really important given the economic circumstances caused by the pandemic. At the same time of pumping over $1 trillion into the economy, we had a zero lower bound for we had 0% interest rates for the federal funds rate. And fiscal and monetary policy hopefully works in concert to respond to macroeconomic crises. And I think 0% rates were warranted, but I'm not sure given back and forth on if there would be additional fiscal response, back and forth on where interest rates would go and how they would stay. And then you had an election in the middle of all of that. I'm not sure that the Fed was the most responsive over that period, adapting to what was happening on the fiscal side, both in interest rates, but also the rest of the Fed's balance sheet, just given the scale of what was happening in our economy. Biden then took office and almost immediately passed a very large additional spending package, pumping more money into the economy. The American Rescue Plan was unequivocally good for the economy. I think we really needed it. And it is the reason we've had the recovery we have had on the labor side of things. We have bounced back to pre-pandemic levels, in fact, lower on the unemployment and wage side, which is really good news for American workers and families, many of whom didn't ever recover from the Great Recession. So I think, again, that fiscal response was warranted, but you do have to take a look at where the Fed chose to adapt and not adapt that. The Fed kept the rate at zero. Beyond that, then we had vaccines, everyone went back to work, things were slowly getting back to normal. You had a supply chain crunch for both short-term and long-term reasons. The Fed again kept it zero. They finally started to hike, and quite rapidly, leaving interest rates decently high for a while. And I think actually my colleagues at Employ America, Skanda Amarnath and Preston Mui, put it really great that at the time of the peak of interest rates and the peak of inflation, there was real risk that the Fed would move too late, that they would want to see real cracks in our economy, not just the risk of cracks, before adjusting and cutting. And I think we saw the beginning of that play out. I would have preferred to see a 25 basis point rate cut at the end of July, and then another 25 points this month if warranted. But we had started to see, especially on the labor side, data start to crack, and the CapEx side, on the business investment side too. We really had started to see those cracks form as opposed to preventing them. And I would have hoped for a more responsive Fed. I do think that yesterday's decision to do 50 instead of 25 was a really good one. But I think you do have to look back at the monetary policy making regime of the last 4 to 5 years and the fiscal policy regime. Those two really should have been working probably more in concert over the last 4 years than they were.
I just have to push back slightly on the point you made about the fiscal stimulus being unequivocally good, were your words. The criticism I've heard of this plan, I'm just playing devil's advocate here, the criticism I've heard is that the stimulus was largely responsible in line as well as the monetary policy easing that we saw during the same time. The fiscal and monetary stimuluses were responsible for the inflation that ultimately ended up being at 9.1% at its peak, which arguably hurt a lot more of the middle class than even, a short-term correction in the stock markets did. Could you comment on that?
Yeah, I think that both can be true. Stimulus can cause some level of increased aggregate demand. That is its point. Two things. The risk of going too big versus the risk of going too small was one that we really weighed. I worked on the American Rescue Plan. It was really important. One, at the time, I don't think people remember back to the bad days pre-vaccine, but that at the time, we didn't know vaccines were coming 6 to 8 weeks later. I don't think any of us expected the vaccination effort and getting people back to work and back to school would happen as quickly as it did. It happened in about a 2-month span. We really deployed vaccines to the entire country in 2 months, which is almost a wartime like effort. That was really good. And so I think the risk there of going too big versus going too small, I'm glad we erred on the side of going too big. That said, I think there were two other contributing factors to the peak of inflation about a year later from that. One of those is long-term supply chain crises that some of which were unforeseen and some of which are due to decades of offshoring and efficiency primacy that ultimately kind of bites you in the butt when you need a lot of stuff. And two, I think we really did see there was some reasonable level of inflation due to input cost rising, and some was a little unreasonable, where corporations saw that they could push the boundaries of where prices were and where they could take them, and they certainly took advantage. I don't think that was the entire contributor for inflation, but we've seen even as input costs have come down, some sticker prices have stayed quite sticky because corporations got away with that. We're seeing that break down now more, but I think in that period of, especially in calendar year 23, as inflation stubbornly and slowly came down, a lot of that was driving the macroeconomic picture. All of that said, I think the American Rescue Plan was really good on face value. I'm glad we did it. I stand by all the policies in there. And I think that what really might have been an appropriate response is for the Fed to take into consideration what was happening on the fiscal side and then appropriately adjust monetary policy a little more responsibly.
Okay, let's talk about inflation now. Both candidates, Trump and Harris, have promised to fight inflation as one of their top economic objectives during the campaign. Take a listen to this clip of VP Harris making a speech on inflation.
So believe me, as president, I will go after the bad actors. And I will work to pass the first ever federal ban on price gouging on food. My plan will include new penalties for opportunistic companies that exploit crises and break the rules, and we will support smaller food businesses that are trying to play by the rules and get ahead.
Okay, I'll pause it right there before we continue. So a lot to unpack there already. Who are these bad actors that she's referring to?
These are both on the grocery retail side, so Kroger, Albertsons, Walmart, Costco, where folks buy their groceries, and the upstream producers of grocery products, whether it's, Frito-Lay, Ben & Jerry's. A lot of these are vertically integrated. So at Kroger, you might buy the Kroger brand of foods, and there's some level of vertical integration there, but it really is the apparatus of food supply and retail in the country.
Okay, has there been evidence that large grocery stores and retailers have been price gouging consumers?
Yes, especially upstream. So there have been several price fixing cases in the last 2 years on the egg side and the poultry side in particular, where there is rampant evidence of decades actually of price fixing in the industry. The eggs case dates back to, I think, 2012 or earlier. So this, again, was a practice that came to light over the last 2 years, but it was something that our economy was enabling far longer than that, in part due to weakening of our federal infrastructure to fight these things. I think what's really notable about Harris's proposal that has gotten lost in the conversation around it is that almost 40 states have price gouging bans on the books already. This is not price controls. This is not a new sweeping thing. It is, in fact, just giving our federal regulators tools in their toolbox to fight new and innovative pricing techniques that can be uncompetitive. And so we have tools on the books to fight price fixing. We have tools on the books to fight anti-competitive mergers. Regulators are currently figuring out how to crack down on anti-competitive digital pricing and the new technological innovations in anti-competitive practices. But this really is a run-of-the-mill tool that we are just enacting at a federal level. And, I think there is not a price gouging authority currently for regulators, but other anti-competitive practices are covered, especially for unfair and deceptive practices. And so I really think this is kind of an incremental change. I think it's really important that the vice president is calling out bad actors and continuing to emphasize the need for regulators to make our economy more fair, the way that President Biden has. But I really think it got lost that this was price controls and that it is not, and there is not a federal authority for price controls, and she's not proposing one.
Okay, how is it not price controls? Can you explain the difference here? Like mechanically, how is she going to implement penalties? She used the word penalties.
Yeah, so right now the FTC, our federal regulator for these practices or for similar practices, has authorities to levy civil monetary penalties when companies do bad things. So in general, if you if you or I broke the law, we might have to pay a fine or a penalty. It's the same for corporations. So that exists on the books currently for lots of different unfair practices. What hasn't, to be frank, there are not details surrounding the proposal. She notably, or her campaign, I don't think she did, but a spokesperson for her campaign notably said that policy would not mirror that of Senator Warren and Senator Casey's, which is in the Senate, there has been a proposal introduced by those two and a number of other senators to allow the FTC to determine an unfair increase in a price. There are not boundaries around that or a definition around that. It is really left to experts at the agency to decide. I think on both sides of the aisle, depending on who's in power, you could see that gamed. Vice President Harris is not putting the details around that proposal to say what exactly it would be, but it is not, I can assure folks looking at this proposal, it is not that you can only sell a gallon of milk for $3, which would be price controls. This is very different. This is saying if, you sold a gallon of milk for $3 the day before a hurricane, and the day after a hurricane, you sold it for 15, that should be illegal.
In Canada, the Trudeau government, in Canada, where I live, they have proposed something similar, which has been met by a lot of criticism and I guess partly misunderstanding as well. The government has proposed here to implement tax penalties to companies that have been engaged in price gouging. I mean, isn't that indirectly price fixing? I mean, you can sell at whatever price you want, but if you go above a certain threshold, you're taxed more.
You're saying that the policy itself would. Are you saying it's similar
the penalty on price gouging? Isn't that just an indirect form? This is a criticism.
Yeah, I think
it's indirect form of price fixing. Yeah.
Yeah, I think there are multiple ways of having the Canadian proposal is quite different from that of Senator Harris's, so I think that's different. My understanding of Trudeau's proposal is probably I don't want to say stronger, but has a little more teeth than what Harris is proposing. I think that general government authorities in Canada are usually outsized compared to that of America, so maybe it's proportional.
All right, well, that's a conversation for a separate time, Elizabeth. Let's look at the Trump side now. He's made similar promises to fight inflation with different philosophy. Let's comment on the energy side of the proposal first. So he wants to incentivize more drilling of natural gas and energy and fracking in the United States. The idea here is to lower the gas price at the pump, thus helping people with their gas and energy prices. Energy, of course, is a major input in pretty much everything in all sectors of manufacturing. So in theory, this should help, would it not? What do you think?
The U.S. is currently the world's largest producer of oil and gas. It is a net exporter of crude oil. We pull a lot of gas and refine a lot of products, pull a lot of oil and refine a lot of gasoline products in our country. Two potential supply chain issues is domestic oil producers are not required to first meet domestic demand. So that means that a lot of our supply, if advantageous to those companies, can be shipped offshores. This happened, you saw increases in exports and really trade imbalances around the world in the wake of Russia's invasion of Ukraine, and Europe dealt with a lot of issues related to that. The other is that while Vice President Harris has also said that she does not oppose fracking, reliance on fossil fuels creates significant macroeconomic risk. And so I think on one hand, you have a president who is saying we should double down on our reliance of a finite resource with extreme price volatility. In fact, 10 of the last 12 recessions have been preceded by a price shock in oil. So we know that this energy security and independence strategy of relying on fossil fuels is one that has inherent macroeconomic risk, both for families and writ large. The alternative that Vice President Harris is proposing is to continue the clean energy investments and transition that we are making under the Inflation Reduction Act. She cast the tie-breaking vote for that. President Trump has vowed to repeal those subsidies and incentives for a transition away from fossil fuels. Neither candidate is proposing that tomorrow we will shut down every oil and gas well in the country and we will have, every car on the street will be a Tesla. No one's proposing any of that. I think what Vice President Harris is proposing is a smart long-term strategy to move our economy, energy security, and macroeconomic energy picture to a more sustainable place that also lowers prices for American consumers. Maybe not tomorrow. On the other hand, President Trump has a failed policy that, in fact, has not insulated American families from increases in prices at the pump or on their home heating bills.
So let's talk about budget now. So no doubt you've seen this study by Penn Wharton. It made the news a couple of weeks ago. According to a study by Penn Wharton budget model, I'll just read a paragraph in the CNBC article. Former President Donald Trump's economic proposals would increase federal deficits by $5.8 trillion over the next decade, almost 5 times more than those of VP Kamala Harris, which would add $1.2 trillion, according to a new pair of studies. Would that not be inflationary on its own?
I think that not necessarily. I don't think deficits are inherently inflationary. I think it really depends under the hood what spending, what raising we're doing. So first, I'd say that our country is not necessarily one that has irresponsible levels of spending, but instead irresponsible levels of revenue. Revenue as a share of GDP from taxes has plummeted over the last 40 years. We are really, as a result of tax cuts on both sides of the aisle, bringing in a lot less money. And it's something the next president, the current president has proposed to deal with. The next president really has to deal with that particular fiscal issue. I do look forward to Wharton updating their study. I think when they did that, it was missing several Trump spending proposals and several Harris revenue and spending proposals. And so I'm not sure the magnitude will hold. I think the magnitude will hold. I think the exact numbers may shift. But I think the important difference between the two candidates is that President Trump is proposing extending expiring tax cuts that were part of his 2017 package. Economists have scored that at about $4 trillion in lost tax revenue. On top of the $4 trillion, the TCJA is estimated to have cost over the decade since it was passed. So there's a huge discrepancy there on the revenue side that he doesn't really deal with. His answer to that is $5 trillion potentially plus. He's wavered dollars in tariffs. And I think we can chat. I think there's a trade section for today, so we can chat more about what that is. On the other side, Vice President Harris has proposed a suite of tax reforms that not only make our economy and our tax system more equitable and more fair, but also then free up fiscal space for necessary investments that our country desperately needs to increase GDP. We know that sending more kids to school and making sure that they're cared for increases their productivity now and later in life and their parents' productivity at work. And so really there's a huge discrepancy in GDP to debt ratios on both sides that I think Wharton talks about in the study. The CNBC article doesn't get into the wonky details, but I am a true nerd, so I dove in. And I think what we really should be talking about is our productivity to debt ratio, which I think the vice president's proposal makes a much greater.
Okay, I do want to talk about
greater progress there.
I do that's an interesting point. I do want to talk about taxes in our tax section, but let's close off on inflation. So take a look at this recent article published by the National Association of Home Builders, the NHAB. It says here, recently released a cost of housing index show that 38% of a typical family's income is needed to make a mortgage payment on a medium-priced new single-family home in the U.S. Low-income families earning 50% of the median income have to spend well more than half of their income, 77%, to pay for the same home. So, I mean, imagine spending 38 to more than 50% of your income on just housing. How do we fix this problem?
I don't have to imagine. I spend quite a lot of my income on housing here in Washington, D.C. I'm sure your housing is not so cheap there.
No.
We have both a housing supply problem and a housing demand problem in this country. It is pervasive on both sides. There are failures in our markets. On the supply side, we just don't have enough houses. There are extreme barriers to building new houses, and there are many proposals to solve that problem. On the demand side, I joked I'll make this joke again, but when Vice President Harris filed her financial disclosures, I think she has like a 2.7% mortgage. And I joke that she should run on giving everybody a 2.7% mortgage. That would, of course, require a lot of economic changes to get the Fed to lower to that rate. But I said that would be extremely popular if we all had 2.7% mortgages. You obviously cannot stoke demand to that extent. We all had 2.7% mortgages until you fix the supply problem. So it really does require both things to fix. But broader than housing, I think one thing that you really touched on is that over the past 50-ish years, it has gotten extremely unaffordable for families, both on their housing costs, but in general for cost of living. And that is also as we have seen a lot more women enter the workforce, and we've seen a greater increase in 2-income families as opposed to single earner homes. And so not only do you have more income going to families, but it is being stretched thinner. And it's something I think our economic policies have to grapple with.
She also proposed giving a $25,000, I don't know if it's a grant or a loan, but basically $25,000 to new first-time home buyers in America. How would that work? What exactly is that $25,000? What form is that going to come in?
It comes via a tax credit, still sort of up in the air. Exactly how this down payment assistance works. Lots of states have these programs. In fact, there are some federal programs on the books. So the mechanics are that it gets to households. Whether a check comes in direct deposit at the end of the year on your tax return, we can figure all that out. But it goes directly to the home buyer. It does not go through a developer, importantly.
Okay. Let's talk about taxes now. Before I get into ask you about the specifics of Harris's tax proposals, let's talk about arguably the most controversial part of her plan, the taxing of unrealized capital gains, which has been speculated that she was considering. I've interviewed several economists about this issue. They've unambiguously opposed this. So for a lot of reasons, one of which is that this is going to crash capital markets, cause a major sell-off, which would induce a recession. So I'll let you comment on how this works first. Let's try to understand this, and then we can discuss.
Yeah, I just really quickly back on the housing point.
Yeah.
Vice President Harris has also proposed a suite of incentives to increase the housing supply by 3 million. So it is not only a 25%,
3 to 5 million,
$25,000 down payment assistance, but also supply side reforms. On capital gains.
Yes.
I think before we talk about the merits of the proposal, I want to talk about who it applies to and how the actual tax works. So the proposal is actually part of a broader tax proposal, which the president has dubbed the Billionaire Minimum Tax. This is slightly misleading because it actually applies to people who have in assets more than $100 million. So not quite billionaires, but very wealthy people. You've read my Substack, so I shouldn't ask you this question, but I will give you a pop quiz, which is how many people is that in the U.S.?
0.06.
Yes, 10,000 people. That's
okay.
it.
Percent, yeah.
Yeah, so 0.06% of people, but 10,000 tax units.
Okay.
That is very few people. Okay. That is in fact fewer people than.
Okay, so just to clarify, it doesn't impact everybody. So if I have a hedge fund with, I don't know, $5 billion of assets under management, would that still apply to me?
Well, if you personally have a hedge fund, so if your assets under management as a human are 5 billion, yes. But if you as a person invest $5 million if you hand it to Blackstone for them to manage, that does not apply to you unless your total assets as a human are over $100 million.
Does it apply to entities like Blackstone as well?
No.
Okay. Because
it applies to corporate. Blackstone is a public company.
Sure, so yeah.
It applies to the owners of those shares, but it is a tax levied on individuals.
Right. Why? Well, I could just move my funds offshore or structure it in an LLC, and it wouldn't be personal anymore, right? There's a lot of loopholes around this.
There are plenty of tax avoidance strategies. The wealthy are very good at it. The point of the billionaire minimum tax, of which the capital gains proposal is a part of, is that people who are worth more than $100 million should pay a minimum of 25% tax on all of their income. And the way that income is calculated is business income, is wage income, and is capital income, such as via capital gains. So for example, Jeff Bezos' salary is something like $80,000 a year at Amazon. That is obviously not the bulk of his earnings or of his wealth. And so what the president's proposal and the vice president has vowed to carry this on is that on their total income, including those unrealized gains, they pay a minimum of 25%.
I'm trying to understand this, though. Why is it income, though, if it's unrealized capital gains?
Yeah, it's a good question. We talk about this in the piece a little bit. On one hand, what we have in this country is for very wealthy people, they fundamentally look different than people like you or me, and we might have an income difference or wealth difference.
Sure.
What this has been dubbed, their strategy has been buy, borrow, die. So they amass a lot of wealth. You can borrow against that wealth at very low interest rates. You then hold on to that wealth until you pass away. And because we have a separate issue in our tax code, stepped up basis, when you pass that along to your children, your spouse, when you pass away, if you bought a million Amazon shares at $10 and it's now worth, I don't know, it's worth $300 now, the entire gap on every share from $10 to $300 is never taxed when it is handed to your children. The basis is stepped up so that when your children take it, the initial purchase value becomes 300 instead of 10, and the entire taxable income or taxable gain between 10 and 300 is wiped away, which means there's a huge loss in tax revenue for the federal government and for state governments, though some states have toyed with similar proposals. So what the proposal is that if Jeff Bezos's economic abilities are not that of his $80,000 salary, they are of his entire net worth, including his yachts, his homes, his unrealized capital gains, whether that be in shares, in liquid assets, or in illiquid assets like his home.
Well, let's talk about your Substack now. You wrote, several paragraphs I can pull from. I'll just take this one first. The purpose of the BMT, which is the Billionaire Minimum Tax, is to make sure that the ultra-rich are paying something closer to their fair share in taxes and to reduce some of their negative economic effects that stem from our current counterproductive tax preference for capital income. So let me just comment on paying their fair share. So before we talk about the second part of the paragraph here, my rebuttal to that is that they're already paying a lot more in nominal terms in taxes than the average person. So why do they need to pay more?
In nominal terms, yes. In relative terms, no. The effective tax rate, once you include those unrealized capital gains for the wealthiest taxpayers, is about 9%, which is far less than what nurses, teachers, or even myself pay.
Okay.
So the point is to narrow that gap. I think you are probably asymptotically approaching that gap given other tax avoidance strategies. But in fact, the ultra wealthy, because of this strategy of buy, borrow, die, and because of the issues we have, both in an imbalance of where they get their income. So if you scroll up in this post, you'll see the distribution of capital to labor income.
Yeah.
Wealthy people just earn income in a different way. The vast majority of it, it's a $5 to $1 ratio for capital to labor income. They just fundamentally amass money and economic power in a different way than me or you or middle-class Americans. So the purpose of that is to correct for that imbalance, both in our tax, because we have this economic imbalance, it's to align our tax system with that imbalance and correct for it.
You've given an example here. Let's consider a somewhat stylized example. Bill Gates owns about 100 million shares of Microsoft. Over the course of 2023, the stock increased in value by $134 per share. Bill Gates increases his wealth by roughly $13 billion. And then imagine, therefore, that the BMT liability would be about $3.35 billion for 2023. Okay, I understand this. What I don't understand is why... Well, how this would help the middle class. Suppose we tax Bill Gates more on his increase in net worth and wealth. How is that going to trickle down to, you and me?
One, I think we've seen that tax changes don't trickle down. But I think how it affects the overall economic picture is two ways. One, we have a lot more revenue to then spend on deficit reduction if that's an important factor to you. And I think some deficit reduction is needed and necessary. And two, fiscal space to make public investments in lowering the cost of childcare or providing paid family and medical leave. Those have huge effects on the middle class. So part of it is about revenue to then spend either on deficit reduction or on new public programs. The other is that the tax in two ways reduces some distortions in our economy. One of them is it will reduce wealth inequality, which has a drag on productivity. And the other is that it reduces what's called the locked-in effect, which is where asset holders hold on to shares or companies or assets when they aren't actually doing so well. So while you might, I don't know, there was a huge sell-off, maybe when Elon Musk took over Twitter, that then wasn't a very good asset to hold, depending on your thoughts on Elon Musk or Twitter. And so a lot of shareholders sold off Twitter shares. One problem is that maybe not enough shareholders sold off Twitter shares because they would have realized the capital gains or losses from their shares. And so it kept them locked into an otherwise less good investment. And so it actually can promote better capital markets if we remove this distortion so that asset prices are not inflated by this locked-in effect, and they really do reflect the true market value of these companies at a point in time.
Okay, I'm going to finish off the tax discussion on a more philosophical question as to why we need to reduce the income inequality. Going back to the graph I showed you earlier, it is a problem. Like I showed you and to the audience, the income gap is growing substantially. But the more philosophical and fundamental question is why. Let me just challenge you with playing a clip of a conservative politician, Margaret Thatcher. This was a famous clip of her back in Parliament in the UK. Let's just take a listen to part of this.
There is one statistic that I understand is not, however, challengeable, and that is that over her 11 years, the gap between the richest 10% and the poorest 10% in this country has widened substantially. How can she say at the end of her chapter of British politics that she can justify many people in a constituency such as mine being relatively much poorer off, much less well housed, and much less well provided than it was in 1979? Surely she accepts that is not a record that she or any Prime Minister can be proud of.
Mr. Speaker, all levels of income are better off than they were in 1979. But what the honourable member is saying is that he would rather the poor were poorer, provided the rich were less rich. That way you will never create the wealth for better social services as we have. And what a policy! Yes, he would rather have the poor poorer, provided the rich were less rich. That is the Liberal policy.
This comes to the fundamental debate between conservatives and liberals on income distribution is to the criticism of taxing the rich and ultimately helping the economy is that you risk making, to her point, everybody less well off, even though the wealth gap is lower. Wouldn't you rather have everybody, to her point, wealthier, even if the tax or the wealth gap increases?
I think the problem is we're not actually seeing wealth inequality shrink. We're seeing it rise. And so the poor are in fact getting poorer while the rich are getting richer. We have to attack both sides of the problem. Part of doing this through the tax system is so that you can redistribute some of that income and wealth. So you can, for instance, invest in capping the cost of childcare at 7%, which would cost something $500 billion over a decade. Then the after-tax income of low-income households increases. And so part of it is about a redistribution of making those folks better off. As you said, housing is completely unaffordable for the vast majority of middle-income Americans. Again, it's about shrinking that gap. Part of that is just asking the wealthy to pay their fair share so that redistribution can take effect. But I think even on a broader scale, what I will say, that's a remarkably productive congressional debate that we rarely have in a couple blocks away at the Capitol here. But I think what it's missing is that inequality is a huge drag on GDP. As Roosevelt's chief economist, Joe Stiglitz, has found for the better part of 70 years, is that there is this really big productivity inhibitor, the greater the wealth and income inequality in our country. And so if we are rooting for economic growth and prosperity for all, we do actually have to shrink this gap.
Okay, well, that's a debate for another time. We could go hours into that. Let's finish off on foreign policy and trade. Trump, as you know, has been very vocal about his support of tariffs. He, at one point, even flirted with the idea of eliminating the income tax and supplementing that with tariffs. How does Kamala Harris feel about tariffs? What is her plan for existing tariffs on Russia, Iran, North Korea, and ultimately going forward if she plans to make any changes at all?
Yeah, I think this is a place where we have sparse details. We probably have the most details on trade policy and trade agenda with China than with other countries. So I will say that's one place where I think the Harris administration could do more to put their specifics out, and I look forward to that. I think she has, for the most part, indicated a preference for continuing the Biden administration policy on trade. And so that we have the most recent experience with China. So I'll focus there a bit, though I think there's a separate sanctions discussion in addition to trade specific policy, tariff specific policy for many of the countries you listed.
Well, let's just talk about sanctions on China and the trade wars with China right now. What do you think should be the correct policy in regards to trade with China, talking about tariffs, sanctions, and anything in between?
I have a Substack for this too.
Okay, we should check out Elizabeth's Substack. Is a takeaway from the conversation.
Yes, but I have a Substack on this, but the TLDR version.
Yeah.
I'll back up quickly to just give some context about. There was a point in the debate that President Trump had a quip where he said, if you hate my tariff policy so much, why did you and President Biden and your boss keep them in place? And that was true. President Biden kept many of the Trump Chinese tariffs tariffs on China Chinese imports in place. That process.
I read your Substack. It was something like, "We all love tariffs now, don't we?" Yeah,
that's it. Yes, that's it. My colleague Todd Tucker and I did a Democracy Journal debate, Matt Iglesias, and I think.
So I'll let you finish, but that's
lovers.
It's a good question. I mean, I'll let you finish, but it's a good question. Do we all love tariffs now? Is that just a non-bite?
There's a horseshoe effect here of so-called protectionism on both sides. But I think that the difference between the Biden-Harris approach and the Trump approach is one of surgical instrument and sledgehammer. So Trump came in, imposed upwards of $300 billion on Chinese imports, some warranted and specific and some less so. We can debate the merits of what he did in between 2017 and 2019, but I'll talk about what he's going to do, which is he has proposed for every country between 10 and 20, he switches between 10 and 20% on all imports, on top of between 60 and 100% on imports from China. This would cost the economy over $5 trillion. There are some estimates that this would raise revenue. I think that's probably not going to bear out. Most of these imports won't actually make it in the country if those tariffs are that high. And so there's a question of if the revenue will actually bear out and who bears the price of tariffs. That's probably a more philosophical debate. But I think the real difference between Vice President Harris, President Biden, and President Trump is one of there are specific industries that warrant trade protection. You can make this argument in clean energy for infant industry. So while we're standing up a domestic industry, that industry might need a little more protection because of unfair market conditions. I have a whole piece about EV batteries and electric vehicle batteries and solar panels and clean energy technologies, where China controls between 70 and 90% of global market share for those. And they have subsidized those industries. And there's lots of IP and other unfair practices that are different from the industrial policy regime of the United States. And therefore, tariffs may be warranted on some of those products for a plethora of reasons. Some political economy reasons, some pure economic reasons, and some competition reasons. There is no economic, political economy, or anti-competitive rationale for blanket tariffs. That is not good policy, and I don't think it's good politics. And I think that where the Biden-Harris administration has used tariffs to combat unfair global competition or bad actors in China, in Iran, and other places, to protect domestic investments in industries and to play into geopolitical congruency, those have been largely effective, though I think Jeff Stein in the Washington Post has a really great series on some ineffectiveness in sanctions, which is separate. Where Trump differs is that he has this recklessly broad approach that would not only have detrimental effects on the American economy, but would have global compounding effects that every Nobel Prize winning economist and many others have said would cause a global recession greater than the last two that we've seen. And that is really harmful.
Okay, final question on foreign policy. How does Kamala Harris plan to end the Ukraine war?
It's a good question. I think on foreign policy, that is probably a place where she feels weakest. But I think in the debate, she showed her strength and what she has done in the Biden administration to negotiate with Putin and with other actors involved in the Ukraine dispute and with the Israel-Gaza conflict. I'm not a foreign policy scholar, but I will say that there are huge economic consequences in addition to humanitarian consequences of Putin's war on Ukraine. It wreaked havoc on many supply chains. Most in Europe and in Russia have come back, and that is good. But obviously, the fact that the war is continuing is not great. I think that I would like to hear more about what her plans are to end the war. But what I have not heard from President Trump is a plan that would reduce any wars. In fact, I have only heard plans that would increase them, and that's concerning to me. But I will leave that for my foreign policy colleagues to dive into the specifics of, but I do think the economic consequences of them are something to consider in addition to the humanitarian ones.
Yeah, we'll revisit that another time. Thank you very much, Elizabeth. Where can we learn more about you and your work?
Of course, you can visit rooseveltforward.org, and the Substack is there for those who are interested as well. And I'm on Twitter at @Pancotti.
Okay, we'll put the links down in the description below, so make sure to follow Elizabeth and her colleagues there. Thank you very much. We'll speak next time.
Thanks so much for having me.
And thank you for watching. Don't forget to like and subscribe.